It's now time to talk about how the business sector is feeling in terms of their sentiment. Confidence among business leaders inched lower in the fourth quarter as a rebound in building confidence was offset by the first significant falls in wholesale and retail confidence since the COVID-19 pandemic. This is according to the survey by Rand Merchant Bank and the Bureau for Economic Research, which showed that the business confidence index dropped 1 point to 38 in the fourth quarter compared with the prior 3 months. We are joined by Siobhan Redford, who is an economist with Rand Merchant Bank. Siobhan, thank you very much for your time this afternoon. One would actually think that confidence would actually pick up ahead of the festive season and the Black Friday frenzy, particularly as we are in the fourth quarter. But what does this tell us about the entire picture, as it seems like business confidence has not picked up ahead of Black Friday and the festive season?
Well, I mean, you make a very good point here, and what does seem to be the case is that our manufacturers and retailers aren't actually expecting that strong a Black Friday or festive season. I think what we're seeing is the impact of much higher food and fuel prices for this year, which, really have impacted where people are spending their money. And over and above that, we've had these much higher interest rates. So demand is definitely under quite a lot of pressure. Adding to all of this is obviously this incredible amount of load shedding we're seeing. That's impacting on your retailers through the kind of hours available for operations. And for those that manage to stay open during load shedding, they're going to be seeing quite a big kind of negative impact on their profit margins, as running generators using diesel has become so much more expensive during this year relative to to the last couple of years, and we've had so much more load shedding.
Load shedding was going to be my next question indeed, because we have been told by Eskom executives that we should expect more load shedding in the coming months, right through 2023. But there are other factors. The rising interest rates, inflation picked up today in the previous months, according to Stats SA. But load shedding is still the big factor among business people when it comes to their confidence levels, even when you're looking at employment prospects.
Absolutely. Load shedding has impacted our retailers, our wholesalers. It impacts mining, it impacts manufacturing. It really is, it has a very broad impact, and also, most likely our small businesses in both, goods and services. However, what we mustn't forget is that also holds within it an opportunity now. And it has taken a long time to see government freeing up some of the kind of red tape, or, getting rid of some of the red tape that was preventing private sector generation. But in the last year and a half, we've seen moves to enable it. And so rather than having to apply for licenses for embedded generation above 1 megawatt, companies just have to register. And though the registration also takes some time relative to a licensing process, it is much, much quicker. And so there is expectations for there to be quite a ramp up in building, mostly in the renewable space for embedded generation for companies. And also we see some progress being made in terms of the independent power producer program, with news recently about some of the projects reaching financial close, which means the next move is the build. And so that's why we see that building contractors, apart from having quite good activity in the last quarter, also seem to be quite upbeat about the future.
Siobhan, I'm going to put you on the spot. A lot of people are saying between 50 basis points and 75 basis points. A lot of captains of industry are waiting to hear what the number is going to be from the MPC tomorrow. What do you expect, and what factors do you think will influence the move that the MPC is going to make tomorrow?
So we are expecting a 50 basis point hike, so we're on the lower end. And really influencing this is a number of factors. One of them is that, while inflation is expected to remain high and slightly sticky for the next couple of months, we do believe it has peaked, and that during the second quarter next year, we should actually start seeing a rapid decline in inflation, with it falling back to within the inflation target, during that second quarter of the year, and even ending the year round about that midpoint of the inflation target. So, the kind of near to medium term already shows us inflation is going to be, obviously in the absence of any further shocks, but is going to be falling. Other factors that, concern the MPC, for example, the exchange rate. It does remain high relative, say, to the starting point we saw for the September meeting, but I suspect that the starting point in the models for the current meeting is probably going to be higher than the prevailing exchange rate now, and our exchange rate now is also lower than it was when the previous MPC decision was made. Adding to that, we also see that break-even inflation expectations are lower than they were in September. And so there are a number of good factors and that support it domestically. And then we think that there is going to start being a slowdown in the pace of hikes with a number of our trading partners. So the evidence for a kind of a lower hike is definitely starting to grow.
Siobhan, thank you very much for your time this afternoon. Siobhan Redford is an economist with Rand Merchant Bank, talking to us there about the sentiment among businesses when it comes to the Business Confidence Index, which has dipped once again in the previous month.